Hey, welcome back. This is Resi again. Today, we're going to talk about stock market. I'm sure that you all want to know in 2020, is your 401k going up? Should I put money in stock? Well, today we're going to look at two articles, one from Bloomberg and one from the New York Times, and then to see if we can get an answer on that question. So the first article that we are talking about is Bank of America says market primed for melt up in Q1 2020. And this is from Bloomberg. And from the New York Times, we're looking at another article. It's called JPMorgan raises 2020 oil price view on OPEC plus cuts, improved economic outlook. So now let's look at the first article. I mean, these two articles are pretty interrelated. So let's look at the first article from Bloomberg about the view by analysts in Bank of America. So Bank of America basically is expecting the S&P 500 index to go up by about 5% in 2020. Now, for those of you who are not familiar with the S&P 500 index, it is basically a macro indicators. It's a stock index that consists of the 500 biggest companies in the world, and it's very much served a similar purpose as the Dow Jones Industrial Index. So what it says that if you have a reasonable non-conservative 401k fund, then you should expect your fund value to grow by about 5% by the end of first quarter 2020. That's by March 31st, 2020. So that's good news. A couple things that this article clarified that they believe will drive this outcome. They are Brexit certainty, trade truth, and Fed hold its fund rates. So, and as you know, Brexit, UK just had its election, so it looks as almost certain that UK is gonna pull out of EU, and the trade truth, of course, between US and China also will help the stock market worth. And the Federal Reserve Bank of US, it's widely expected to hold its rates, its lending rate steady. So that helps the liquidity in the market and help business cash flows and growth. So now let's turn our attention to JPMorgan, the article by JPMorgan from the New York Times. Now they look at this issue from a slightly different angle, that they are predicting the Brent oil price index in 2020. So you might not know, but the oil price is believed to be highly correlated with the economy. So when the economy is good, we expect the oil price to go up. This makes sense because oil price is largely driven by industrial demand. So if the economy is strong in the world, then you should expect the oil price to go up. It's a supply and demand relationship. So JPMorgan is forecast the oil price to be about 10% higher than what it originally did, from about $59 per barrel to $64.5 per barrel. Now this forecast is for by the end of the year 2020. So we can interpret this as the JPMorgan expect the broad stock index such as S&P 500 to grow by about 10% by end of year 2020. So this is a slightly, I would say, slightly more conservative forecast than what Bank of America did, because Bank of America is forecast a 5% increase just by the first quarter. So now this JPMorgan is forecasting a 10% increase by the end of the year. So, and similar to the paper by Bank of America, JPMorgan cited the fading of idiosyncratic headwinds such as Brexit, trade war. So that helps stabilize the economy around the world to promote growth. And now, I think this outcome is very likely, and I would plant my money based on this growth. I would feel good putting money in stock market, at least in the first half of 2020. And however, and again, I'm not an investment advisor, but if I were to put money to choose where I put my money, I would trust the stock market. I would trust the stock market will give me anywhere between a 5 and 10% growth in some parts of 2020 or better. Now, this is not without worries. A couple things to note here is, one, this article is only pointing out this prediction for the first quarter or two, but not with no mention of the second half from Bank of America. And the reason being that the second part of 2020, as you would probably guess, carries some more risk. One, we're coming up to the election years, and we know that election years is generally tend to be chaotic, and the outcome of the election will greatly affect the stock price. So, and of course, we have the trade tension with EU coming up, so that can also be a drag on the stock market valuation. And another point is the continued slowdown in the Chinese economy. So we would have to see if they are able to turn their economy around. In turn, that would help our stock market price valuation. And lastly is the newly agreed upon US and China trade deal. So we would have to see how that trade deal is implemented on the Chinese side and on the US side to see if that agreement will hold. If the trade truce can grab hold, or it will make a comeback at some point of 2020. And if it did, it certainly would knock this prediction off its path. Hope this helped. Please like and subscribe, and comment and let me know what do you think about where the stock market is going. Are you putting money in the stock market for 2020? Thank you.